Well, good evening, all. I'm Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening, and I'm a little late. I'm at 6:35 p.m. Central Time. I recorded everything earlier, and I forgot on the camera it was out of focus. You got to hit a button as we record, and I didn't like how it looked, so I said, I'll do it again for you. All right. Why the heck are we up $54 in gold, $1.25 in silver, up 500, nearly 600 points in copper, and platinum up $22? Okay. Today was the FOMC meeting. At 1 o'clock, the statement came out, 1:30, the press conference. Take a look at the financial market update. I go through the whole spiel as to what went on. Okay, I'm not going to do it again here. Suffice to say, Fed Chair Powell made a watershed event. They are no longer fighting restrictive policy, taking that off, going to now in steps make the policy much less restrictive. You've gone to pauses, you paused again today, and soon the cuts will begin. Whatever the word soon might be, we'll talk about that another time. What time do they settle these markets? Settlement time in futures is different in all the futures than the close time. It can be a 5-minute difference. It could be 3.5-hour difference. It varies all over the board. The metals settle at 12:30 p.m. Central Time. 3.5 hours later, the final trade comes in, but the settlement was determined at 12:30, well before we get into the FOMC meeting. So when you get big reports like that, you got to adjust your thinking as to what it is. Do I think it's archaic what the Chicago Merc does with it? I do. Are the London exchanges anywhere near as important in rate setting for gold and the like? No, they've lost all that. All right. They're there, don't get me wrong, and for nickel in certain markets, but I would say that for gold, the United States sets it with our exchanges, which trade 23 hours a day. So why are they going with that? It makes no sense anymore. But again, it's one of these things that carry over and they don't change so fast, if ever. All right. So when we come to the gold market, remember, I'm going to leave you to go to the financial update, and you can hear my comments on what the Fed did and what's the ramification. You can see that the market is staying over the 18-week average of closes. You had that monster break, and I cannot emphasize enough. I want you to please listen. If you don't know how to work with Bollinger Bands, one of the best technical tools ever developed, and the combination with a momentum study, I use my own version of slow stochastics. You are trading without both hands. Bring those pistols out, be able to shoot and react, all right? Vegas is built on people that think the markets are going to the moon or they're going to zero. Sometimes they go to zero. Do you remember crude oil went under zero? It did happen. Do you remember interest rates went lower than zero? They're still that way in Japan. It can happen. But typically, if you're outside of a Bollinger Band, you're in borrowed time, up or down. So this market has just negated a downtrend. What is Ira talking about? Again, I'm that third person guy. Lower highs, lower lows, a downtrend by the classic method. Then we got this pattern today where the market had a huge range and settled near the day's low, only up $4. Tonight, the market is catching up because that was a 12:30 settlement, and the market exploded afterwards, and you're up $53. So in the past two sessions, you're up roughly $58, $59 an ounce. Big move. But the pattern isn't bullish yet. It is out of a downtrend. A true bull pattern has higher lows and higher highs in some manner. Next, we take a look at moving averages. And what the market had been is it was fighting a battle, and you can, let me come to that. In fact, you see it so clear here. At the 18-day average of closes. And that's often where the battles are fought. But when you break down, you always look at a 200, 100-day average, or if you go up and they're there. Why? Well, a 200-day average, think about it. It's a one-year moving average, and a 100-day is just about a 6-month moving average. They're real important. Do they have to be? No, sometimes the markets pay more attention than others. I wish I could tell you why, but I can't. All right? But I pay attention all the time to those two main moving averages and always the 18. Why the 18? Because if I'm under it, I have a bearish bias, over a bullish. And when markets get to extremes, they like to return to this number to decide what to do. I see it over and over on charts, and you will too once you train your eye to look for that. So now tonight we're over this. So we have an upside bias in a market out of a downtrend. That's how I'm viewing what the market is right now. In terms of Bollinger Band, you never did get to the lower band, nor did you challenge the 100-day with it. Okay, so we know that that's the area that the market fought at. The suckers bought over the upper Bollinger Band and got themselves caught in a huge manner through there. All righty. When we take a look at the momentum, you're oversold. Not embedded, you're oversold. Oversold market, got to the first challenge of a 200-day average. If you're a subscriber of mine in the morning, I teach you about this. I reinforce every day everything I know. Don't do it on every chart. I'll move around. Why would you want to go short? You'll hear me say this in an oversold market at the 200-day average. It's one of your main supports. I hate going short under it. I'm making this up. I could push a button like Kramer has, and this would just come out because that's how I teach. And boom, the market's there. Now, the gold, silver. All right, it's going to be time now to move away from D's. We're just about at that point. But silver all of a sudden is catching up with gold. It was a question of what happened at this level. It hasn't done it yet. It hasn't turned the tide where silver is stronger. It's weakened that relationship. In other words, gold weakened against silver. And as you can see, silver is exploding tonight up $1.30. I didn't think the market was going to go down to challenge the Bollinger Band, and nor did I think you were going to get under this low or this low. And if you're a subscriber in my morning videos, you know I'm telling you exactly what I've been saying. So now the question is, for anybody that's been accumulating longs, do they do you any good? That can't answer the question yet. And no, I am not formally long or short that market. In the copper market, you got the bias up tonight and the trend down. Why are we even up? China hasn't done anything. Stupid me. Copper's priced universally in dollars. So the lower dollar gives a boost to some commodities priced in it. Now, grains didn't do that today. The grain market fought that all day long. It stayed lower, and yet it gets the benefit of the dollar dropping down. So it'll be interesting tonight after 7 o'clock when they open. We're not at that point yet. If they get a bounce because of that. But they closed at 1:15. They did not get to see the Fed press conference. So I would expect maybe they get a little bounce tonight. Now, if you can take out this high right here of 386.40, it's a good sign that the market has made another bottom. Against what number? What's the major moving average you're looking at? We know the pivot average is the 18. Markets like to fight against that. But why would you go short on the first challenge of a 100-day or sell? Or sell. Let me say it different. Or buy. The sell is underneath. Or buy over the 200. It doesn't make sense. These are the first challenges of major averages. It's staying right in the center. The platinum's different. You had a bullish crossover. The 18 just got over the 100. Doors open to go to the upper Bollinger Band before you get back under the recent low, as I see it. In the dollar index, you broke the attempt at an uptrend. Let me walk you in here. Higher lows, higher highs, right in each time to the 100-day average. It's been having a son of a gun time. It got down to the 200, went back, and it's been fighting a battle between these two averages now over and over. And today there was capitulation, all off the FOMC. Now, one day doesn't mean you're going to fall apart forever. If you get follow through, wherever the Bollinger Band is the next likely target in it. You put it together, you get a game plan. And I have one for you. Here's what I want you to do right now. Either click up here and go learn, take the course right now on Bollinger Bands, or look at the ad that I'm having and understand what we're doing. It's so simple. This will carry you for 2024. You'll be in line with what I'm doing. You'll understand it. The gentleman that wrote me the other day, and I wrote him this morning on YouTube, and I said, he asked, what's embedded? I explained it. Take the course. Now learn. I'm Ira. You have yourselves a great evening, and I'll talk to you all later.